Hi, today's video is all about remortgaging to raise some extra cash. Hello, welcome back to our channel and podcast. My name's Gemma and here at WS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Ifti joining us. And for those of you who are new to our channel, Ifti is a trained accountant and mortgage advisor who's been in the industry for over 11 years. And he is also one of the founding directors here at WIS. Hi, how are you doing today, Ifti?
I'm very well, thank you. How are you, Gemma?
Yeah, not bad, thank you. So today we are talking all about remortgaging to raise some extra cash. So for everyone watching, let's just kind of clarify, what does it mean when you remortgage to raise extra capital?
Yeah, quite often mortgages are on a deal, right? So let's say somebody took a 25-year mortgage. They generally get a 2-year deal or a 5-year deal, 3 years, it varies, right? So you take that deal. Towards the end of the deal, you do something called a remortgage, which means after that 2 years, you move across to a different rate, right? At that point, some people borrow some extra money because obviously you have the house as a collateral. So with that, you can sometimes borrow some extra money. So for example, let's say somebody has 25% deposit, right? They might say, okay, I want 10% out of my property. So they can take some money out. Now that's called remortgaging with the additional capital raising. That's the term we use.
Now, do you always have to be on a deal to remortgage, or can you remortgage if you're on a standard variable rate?
Yeah, you can, but in our world we call it further advance, right? So if you're currently on a deal, you can do something called a further advance where you go and tell the bank, okay, I need £10,000 more, can I do a further advance? So that's called a further advance, but it's kind of like a remortgage, but not exactly a remortgage because you're still with the same bank, but you're raising extra money. Of course, you can break the deal and go to another bank and do a remortgage. That's allowed, but there is likely to be a penalty.
Alright, so next question we've got is, would it be a good idea to raise extra capital?
As much as possible, we discourage people from doing this, but sometimes there are very good reasons why they might want to do this, right? For example, they have a lot of equity in the property, they want to expand the property, like, get an extension, but they don't have the cash, right? So in the instances like that, it sometimes makes sense for you to do that. Let's say they always wanted a new kitchen, their kitchen is really run down, but they don't have the money to do that, right? But that only increases the value of the property. So in instances like that, sometimes we say it's okay, it's a good idea to do that. And sometimes people do this to settle some of your old debt, because if you have expensive loans out there,
like unsecured debts.
Yeah, that's right, unsecured debt. Because I've seen people paying 12-15%, but whereas sometimes the mortgage is only 1.5%. So for certain people, it makes sense to do that, right? But raising extra capital is always a question. It's something that you want to talk to an advisor properly, just to make sure that you are doing the right thing. Because raising extra money means your mortgage will go up, your monthly payment will go up, and likely that you extend your mortgage as well, right? Because if the payments go up, sometimes you have no choice but to extend your mortgage, right? So which means it might take longer for you to settle the mortgage. So therefore, it's always a good idea to talk to an advisor before you do this.
Yeah, definitely. So now let's talk more about how the lender figures out how much you can generally raise. What do they do? How do they figure this out?
Yeah, so what the lenders do is there is something called affordability calculator. That's something that an advisor can guide you with because each bank has a different way that they assess a client, right? So one bank might say, I'll give you 100,000. The other one might say, I'll give you 110. And another one might say, I'll give you only 90, right? So that can vary based on bank to bank. So there is something called an affordability calculator, which advisors can work on and tell you what the bank is likely to offer you, right? So that's something that you can do. So it really depends on your income and various other circumstances like, your debt and any financial commitments you have, how many sort of, let's say, kids you have. It all varies based on those factors as well, right?
Yeah, and also the property price, isn't it? Essentially, how much your property's worth will help
get
an understanding of how much you can raise.
Exactly. Banks usually have a cap as well. Because they'll say, okay, we will let you borrow up to 85% of the property value, right? So there is a cap like that as well. So you might be able to afford more than that, but they will always have a cap, right? So yes, you're right.
If a customer, feels like their property is valued more than what, the bank is suggesting that it's valued, is there anything that they can do about that so that they can kind of maximize their extra capital?
Yeah. So for example, somebody's doing a remortgage trying to borrow extra money. They went to X bank, and X bank says the property is worth, say, 100,000, and we can give you 85% of the property value. Now, if you're not happy with that number and you think the house is worth 120,000, you can make an appeal to that bank saying that, based on these facts, we believe the property value is 120 and not 100, right? So banks may look at it, but the success rates are quite low, right? Because through our experience we find it, because valuers are generally professionals and they look at various factors before they come back with this number. So it's very difficult to challenge that. Of course, you can challenge it, but success rates are quite low. So if you're still not very sure, it's sometimes a good idea to apply with another lender, because they might do the valuation as well, right? So through their valuation, you may get a slightly different number. So we've seen people have more success using that route, but you might want to start with the challenge first, right?
Okay, so say you're looking to raise extra capital, what kind of documents are you going to need to provide to do this?
Yeah. So banks are quite strict in this area. They want to know that you're using it for the right purpose, right? Just because you fancy going on a holiday, you can't say, can I raise 10,000 extra pounds, right? They won't give you the money, right? So you have to be careful, when you do this. There are only on
what are you using it?
Yeah, that's right. So you need to be very clear as to what you're using the money for. So like I said earlier, you can use it for a house extension. You can use it to, say, improve your kitchen, or you can use to pay off your debt, right? So banks might need proof for this, right? So if you say you're going to extend the property, you're likely to have to employ an architect, and architect will give you quotations and they'll give you a plan. So the banks might want to see that, right?
Yeah.
So you might need proof of that. There are some banks who sometimes don't ask the proof, but there's a very good chance they will ask you for the proof, right? Especially if you're trying to borrow a lot of money, they will ask you that. So better to keep all those things ready in addition to the normal documents that the bank will ask. They might ask proof for what this money is used for.
Yeah, I mean, that's why it's definitely worth talking to an advisor on this one, because they can help guide you and, then understand more about what you might have to provide. And it can be a bit of a lengthy process, can't it?
Yeah, it can be. Yeah, that's right. Yeah.
All right, well, you mentioned there about loans, so I was just going to ask you, because obviously this is something probably people are wondering, but, would you say it's a good idea raising capital to pay off loans?
It really depends, right? Of course, like I said, if you're paying 30% interest somewhere else, it may be worth looking at it. But this is an area that we generally sit down with the clients and understand what it is you want the money for, because the last thing you want is the client to take the money and create more debt and not pay off the debt, right? So you need to do a special assessment when it comes to these things. So if you are trying to settle off your debt, we generally have a more in-depth conversation just to ensure that you know what you're doing, right? Because obviously it's adding more debt somewhere else, and we also need to make sure that you pay off your loans as well. So it's a conversation you need to have with an advisor, without which we can't make that recommendation. So it really depends. But for some people, that is a good option. But if you have a situation like that, I strongly suggest you speak to an advisor before you do anything else.
Can you remortgage your property in the middle of a fixed deal to raise extra capital, or do you have to wait until the deal's ended?
You can, but that will be a further advance if you're trying to do that. Unless you go to another bank. If you do go to another bank, you can do a remortgage. But remember, if you go to another bank, you might have a penalty to pay, which is in the form of early repayment charge, because banks don't like you making deals in between. So that's the problem you have, right? Ideally, if you're trying to raise money, you probably want to do it along with your remortgage, right? So that's probably the best time to do it. But depending on your circumstances and things like that, it might be an idea to do a further advance, or worst come to worst, you might want to consider remortgaging with another lender if they are not offering the money that you require. But again, if you're trying to do that, have a conversation, because there's penalties involved. So it's always best to speak to an advisor.
And if you do want to do a further advance, is that a similar sort of rate to a remortgage rate, or is it different?
Again, it depends on from bank to bank, because they sometimes have further advance rates which are different to remortgage rates, right? Remember, further advance is always a top up, right? So further advances are not bigger amounts, right? So your mortgage might be 100,000, but the further advance might be just 10,000, right? So the amount of work the bank has to do for the 10,000 is not too different to the work they'll have to do with the 100,000 mortgage, right? So they might factor that, and the rates might be a little bit more expensive. It may be different, but some banks offer the same rates, right? So it really depends on where you're going.
Alright, thanks Tifty. Have you got any final thoughts for us today?
Yeah, I mean, we are strong advocates of telling people to pay off their mortgages early. So raising capital for a lot of people, it's only adding additional sort of burden, right? Because obviously you're taking a bigger mortgage now, right? So therefore, it probably is adding more onto your debt, right? So be very wise when you're trying to do this. If you're thinking of raising money, it's always a good idea to sort of speak to an advisor and also try and make sure that you're raising money for the right reason. Don't raise it for the wrong reasons, because remember, you're creating more debt somewhere else, right, by doing that. So it's always a good idea to speak to advisors, especially if you want to raise money. And remember, banks are a little bit more strict when you raise money compared to a like for like remortgage, because they will assess you a little bit more thoroughly. That's why I say it's always best to speak to an advisor on this before you go ahead.
Alright, thanks Tifty. Thanks again for some more great advice. I just wanted to point out that these points may or may not be applicable to everybody, so if you're unsure if they're suitable for you, then please do talk to an advisor. And if you don't have an advisor, I will leave RWS contact details below, as we are always more than happy to help. Another reminder that as a mortgage is secured against your home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you for joining us again today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.